Most retail traders in India operate without a system. They buy on instinct, size on conviction, and exit on emotion. The result is predictable, small wins, and catastrophic losses. TradeForge Alpha is built on a different premise entirely. Every position has a mathematically defined maximum loss before a single rupee is deployed. Every exit is triggered by price action, not panic. And every rupee of capital is scaled into winners, never averaged into losers. This is systematic risk mitigation, built for the Indian equity market. Welcome to TradeForge Alpha. The market does not care about your conviction. It does not care about the tip you received or the chart pattern you spotted on a forum at midnight. The market rewards one thing: discipline applied consistently over time. Yet most Indian retail traders walk into the market with three structural defects working against them. Emotional averaging. When a stock falls, they buy more, throwing good money after bad on a thesis the market has already rejected. No stop-loss discipline. They hold losers indefinitely, hoping for a recovery that may never come, while selling winners too early out of fear. A single unmanaged position can erase months of compounded growth. Random position sizing. Capital is allocated based on tips and gut feel, not mathematics. With no rules for sector exposure or single stock limits, one concentrated mistake can be account ending. The market exploits these instincts every single session. TradeForge Alpha is the antidote. Mistake retail traders make. TradeForge Alpha has a rule for every one of them. Loss aversion causes traders to move their stop loss lower to avoid realizing a loss, turning a small, controlled exit into a catastrophic drawdown. TradeForge enforces a hard 10% maximum loss boundary at the moment of the initial entry. It cannot be moved lower. It cannot be ignored. The disposition effect causes traders to sell winners too early while holding losers too long. TradeForge resolves this with a 21-day EMA trailing stop, a mechanical exit that keeps you in a rising trend until the trend structurally breaks. Overconfidence produces oversized positions built on tips and social media momentum. TradeForge's rule engine restricts every position to a hard portfolio percentage maximum. Conviction is not a sizing metric. Mathematics is. Recency bias drives traders to chase overextended sectors at the peak of a cycle. TradeForge enforces sector concentration caps, structural limits that ensure your capital is never over-allocated to a single theme. The instinct says hold, average, hope. The system says cut, scale, compound. TradeForge Alpha is not a journaling app. It is not a spreadsheet replacement. It is a pre-trade discipline enforcement system. The platform is built on 4 rule engines working in parallel. The 5-tranche system governs how capital is deployed. You never go all in on day one. You start small and you add size only as the market confirms your thesis, never before. Risk-layered entries ensure that every tranche added to a position tightens the stop loss automatically. Protection is built in. Adding size never adds risk. The AlphaGuru Signal Engine gates every entry with a 4-parameter technical filter on the weekly time frame. No capital is deployed without mathematical confirmation. The signal tells you whether to enter or to wait. Cloud-first analytics give you XIRR, FIFO lot accounting, and STCG/LTCG tracking, synced across every device in real time. Your portfolio is not an Excel problem. Stop treating it like one. Before a single rupee is deployed into any position, the stock must pass the AlphaGuru gate. This is a 4-parameter technical filter evaluated on the weekly time frame. Daily noise is irrelevant. Only the weekly structure matters. Filter 1. ADX greater than or equal to 20. This confirms the stock is trending, not chopping sideways in a range where capital earns nothing. Filter 2. RSI above 60 on the weekly. This confirms strong institutional buying momentum. Below 60 means the trend lacks conviction. We wait. Filter 3. Wick percentage below 25%. A weekly candle with a wick greater than 25% of its range signals heavy supply overhead. Large holders are selling into every rally. We do not enter a stock that institutions are distributing. Filter 4. Up-down volume ratio above 1.2. Buyers must be more aggressive than sellers. Volume confirms that demand is structurally stronger than supply. Only when all 4 conditions are met does AlphaGuru issue a strong alpha signal, the only signal that authorizes a T1 entry. Everything else produces a heavy supply warning, a non-trending flag, or a neutral weight. Capital sits idle until the gate is cleared. The 5-tranche system is, at its core, the mathematical opposite of averaging down. Most retail traders do this. A stock falls, They buy more, it falls further, they buy more again, adding risk to a losing thesis at every step. The loss compounds. The system compounds it further. TradeForge Alpha does the exact opposite. T1. The initial entry deploys 20% of the intended capital. The stop loss is set at 10% below entry. This 10% loss on T1 becomes the total rupee risk budget for the entire position. It will never increase. As the stock moves up and confirms the thesis, T2 is added. The stop loss is recalculated upward. Total rupee risk remains identical to T1. Position size has grown, risk has not. T3 is the inflection point. The stop loss moves to the weighted average entry price. From this moment, the worst-case outcome on this trade is zero loss. Capital is fully protected. T4 transitions the stop loss to the 21-day EMA. The profit lock phase begins. Every rupee of upside is now mechanically captured as the EMA rises. T5 deploys the final tranche at maximum scale. The trailing EMA stop rides the trend until a structural break triggers an urgent exit signal. Capital exposure grows as the market confirms your thesis. Risk never grows at all. This is risk velocity, deployed in your favor. Phase 1 of the 5-tranche system has a single objective: contain the rupee risk before scaling. T1 is the initial entry. The formula is direct: R initial equals C1 multiplied by 0.10. The stop loss is hard-coded at 10% below the entry price. This figure, this single rupee amount, is the maximum this trade can ever cost you. It will not move lower. It will not be negotiated. T8 to 2 is risk-neutral scaling. Capital is added only after the stock has moved 5% above the T1 average entry. The stop loss is recalculated upward for the combined position. The governing formula ensures that the combined position's downside, price average minus new stop, multiplied by total shares, does not exceed R initial. The outcome: you now hold a larger position with a higher average entry, but your total rupee exposure at risk is identical to what it was at T1. Adding size never adds risk. This is the foundational principle of the system. Phases 2 and 3 are where the architecture of the system becomes most powerful. T3, break-even, triggered after a further 5% move above average entry. At this point, the stop loss moves to the weighted average entry price of all 3 tranches combined. Status: zero risk. Capital is fully protected. From this point, you cannot lose money on this trade. The worst outcome is a break-even exit. T4, trend ride, triggered when price is confirmed above the 21-day EMA. The stop loss transitions from a fixed rupee amount to a dynamic trailing stop on the 21 EMA. Profits are mechanically locked in as the stock rises. You are no longer in a risk management posture. You are in a profit accumulation posture. T5, maximum scale. Full capital allocation is achieved. The 21 EMA trailing stop continues to function as the exit mechanism. The trade rides the trend until price closes below the EMA, which triggers an urgent exit signal. The structural break is the signal, not your opinion, not your hope. The price action itself tells you when the trade is over. A single stock system without portfolio-level controls is incomplete. TradeForge Alpha enforces 3 concentric layers of capital protection around every portfolio. Layer 1, position sizing limits. The rule engine restricts the maximum percentage of total capital that can be allocated to any single stock, typically capped at 10%. A single failure cannot cause a catastrophic drawdown. The cap is structural, not aspirational. Layer 2, sector concentration caps. Every sector in your portfolio has a maximum capital threshold. This protects against the most common mistake of systematic retail traders: over-concentration in a hot sector at the peak of its cycle. When a sector like banking or pharma faces a regulatory shock, no single sector concentration is large enough to cause a portfolio-level crisis. Layer 3, dynamic risk budgets. The risk budget per tranche, typically 1% of total capital, is fully customizable. You can dial the aggressiveness of your deployment while the mathematical safety rails remain in place. On the right, the sector heat map gives you live visibility into your exposure across every NSE sectoral index, color-coded by performance, updated in real time. This is the view your portfolio has needed. Performance analytics in TradeForge Alpha are designed for one purpose: mathematical truth. Not approximations, not broker-provided figures that exclude partial exits, exact figures. To the rupee. XIRR, the extended internal rate of return, accounts for the timing and magnitude of every capital inflow and outflow. It is the only metric that gives you a true annualized return across a portfolio with multiple deposits and withdrawals. Profit factor measures the ratio of gross profits to gross losses. It is the efficiency metric of a trading system. A profit factor above 1.5 indicates a mathematically sustainable edge. R multiples express every trade's return relative to the initial risk taken at T1. A trade that returns 3 times the T1 risk budget is a 3R trade. Tracking R multiples reveals whether your edge is in win rate, in trade sizing, or in the quality of individual setups. Benchmark comparison measures your portfolio XIRR against the Nifty 50 and Sensex in real time. TradeForge Alpha is built on a cloud-first progressive web app architecture, which means it is installable natively on both iOS and Android without requiring an App Store download. The core data layer runs on Supabase, a PostgreSQL cloud database with row-level encryption. Every trade entry, every stop-loss value, every tranche record is encrypted and synced across devices in real time. You can enter a position on your desktop in the morning and check your trailing stop on mobile during market hours. The data is always current, always yours. For pro-tier users, live broker API integrations eliminate manual entry entirely. One-click contract note import is supported for Zerodha, Dan, Upstocks, and Motilal Oswal. Your executed trades flow directly into TradeForge, with no reconciliation required. A disciplined system is not one that only works in a bull market. It is one that changes its posture based on what the market is telling it, without requiring you to interpret that signal manually. In a bull market, the 5-tranche system is highly efficient. The 21 EMA trailing stop filters intraday noise, keeping capital deployed in the position until the macro trend structurally breaks. T1 through T5 all execute. The full pyramid compounds. In a bear market, the system goes into capital preservation mode. Hard 10%, T1 stops trigger early, before damage can compound. Because T2 through T4 require upward momentum to trigger, the system automatically halts capital deployment. There is no averaging into falling knives. The system cannot allow it. In a volatile or range-bound market, the system produces a high frequency of T3 break-even exits. Capital is protected. You may experience the psychological cost of flat trades, but you will not experience the financial cost of catastrophic drawdowns, a necessary mathematical cost. To avoid an unnecessary catastrophe, the system adapts. You do not need to. The Indian retail trading ecosystem has excellent tools for execution, excellent tools for screening, but no tool that closes the loop between signal, entry, journal, risk, and performance. Broker platforms like Zerodha Kite handle execution well. They do not have a 5-tranche journal, auto stop-loss recalculation, or technical gating. They are execution platforms, not discipline systems. Options tools like Sensible are derivatives-focused. They have no equity position management framework. Screeners like Tijori Finance identify stocks well. They do not journal trades, manage stop losses, or track FIFO P and L. Excel and Google Sheets break at scale. They require manual tracking, have no live CMP integration, and cannot enforce any rules whatsoever. TradeForge Alpha is the only platform that combines pre-trade technical gating through AlphaGuru, 5-tranche position building with auto stop-loss recalculation, FIFO P and L tracking, live CMP integration, and sector-level portfolio analytics in a single system. This is the missing layer. And it is now live. TradeForge Alpha is structured across 3 tiers, designed to give every trader access to the core system from day one, with a clear upgrade path as their portfolio scales. The free tier is permanently free. It includes the full 5-tranche trade journal, the AlphaGuru Signal Engine, auto stop-loss calculation, and cloud sync across devices. This is not a trial. It is not a limited demo. The core discipline system is yours at zero cost. The Pro tier is priced at 4,080 rupees per year, at founding member pricing for early access users. Pro unlocks live broker sync with Zerodha, Dan, Upstocks, and Motilal Oswal, XIRR, and sector heat maps. RRG charts for sector rotation analysis, STCG/LTCG tax summaries, and price alerts. Start with free. Graduate to Pro when the system has already paid for itself. In a market driven by noise, emotion, and tips, sustainable compounding requires one thing above all else: institutional discipline. Not better tips, not more screens, not faster execution. Discipline, applied consistently through a system. TradeForge Alpha bridges the gap between retail intuition and systematic risk management. It does not promise you will win every trade. No system can. What it guarantees is this: when you are wrong, you lose a controlled, predetermined amount. When you are right, you capture the full extent of the trend. Small losses, large wins. Compounded over time. That is the mathematical engine of wealth. Process over outcome. Join now at app.tradeforgealpha.com.